All right, guys. We're gonna get started. We'll start on X in about 4 minutes, but I'm just gonna chat for a couple minutes. Yeah, guys. Logan Paul knows what he's doing. I'll tell you what. On that stream last night, the biggest thing that stuck out to me was in the middle of this live stream, 200,000 people watching, making $16 million on this card. He kept stopping, knowing how big of a story it was and how big of a social media moment it was. He would stop and tell Mac to take pictures, and then he would check the pictures before they were posted. He would tell him exactly what to post on the pictures, everything else, while sitting there live. It's just that's how you do it. That's how you make money. That's how you use social media as a powerful weapon. Period. We'll get started in a minute here. It's in a post on X in about 1 minute. They could wait though, so I don't even care. Stop growling, Bubba. I mean, but the Pokemon market is so red hot too. I think maybe let's be real. That car was going to go for 8, 10, 12 million either way. He probably got an extra 4 million because he's Logan Paul, but buy low, sell high, peak. Pokemon is hype train right now. Hype train. All right, let me make sure this is going on X. Perfect. Let me make sure it's posted. And let's go over some charts, baby. Yeah, it's just the reality of it. It's that's how the power of social media. And that's just what it is. All right. Well, everybody in here right now, I'm taking a screenshot of these names. Each of you are getting added into the drawing for a free funded account March 1st. I've got a running list going. Everybody knows if they're on the list. I've been telling you the stuff that I'm adding on the list for. So Bagman, Jeff, Jaybird, KP, Latavian, Manuka, Vance, Wolf, April, and Sal. You guys are added in for that drawing for the funded account on March 1st because you're the first ones in here. And let's look at some charts. So I took a poll, and the poll was prep for trades for this week. So that's what we're doing. That's what won the poll. So let's do that. All right, let's look at some charts. Let's try to figure out what has a good setup, what doesn't, and go from there. This Tesla chart kind of looks like shit. First chart I want to pull up is Palantir. Because of the selling, and if we catch a little bit of a bid at all, what are we looking at on Palantir here? Okay, we were up 2% on Friday. Let's put on the 4-hour here, and let's identify some levels. All right, so I've already got this arrow drawn right here. Obviously, we see this. Let me pop on our volume profile, and I want the 200-day on. There we go. All right, so pretty much through this whole thing, let's delete every line on this chart. 75 drawings. Oh, I can't remove these. Look at this. Who remembers what this is? Who's the first person to chat? What is this? What is this from? What is this? Boom, boom, boom. That's all you get to see. What was that? Who remembers that? Anyone in here? Anyone? This is the model for something. This is the model chart for something. Oh, I don't even have a comment. 5, 4, 3, 2. I got one person typing. I'll wait to see what they say. Yes, Jaybird, you are in. Jaybird and Vans, you both popped up at the same exact time. And Liftavian, each of you get an extra entry for March 1st. Let me screenshot all three, add them to my list. Yeah, this is the chart I used to teach Wyckoff back in the day. In a skills lab, as a matter of fact. If you ever want to just dig into Wyckoff accumulation, this chart is perfect. And we talked about this is the chart I can't delete this. This is like memories right here because this chart was one of the most perfect charts to learn accumulation, distribution, and how to build into a long-term position. It was just perfection. So I can't delete all that. Never mind. So anyway, let's go back up here and we'll just delete a couple things and start clean with this chart. If we really want to kind of see, well, at what points do we believe it's going to come down further? What points do we believe it could get an actual bid? So looking at this chart, if everything's deleted except the 200 and our volume profile, first thing what my eyes are instantly drawn to is this point right here. Because when I'm drawing trend lines, guys, and I think that a lot of people overdraw the shit out of trend lines, and I'm just going to be super honest about that. They're like, most people are going to want to draw it like, let's be real. They want to draw it here, and then 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 here. And what does that do? All that does is give you a bunch you're overdrawing trend lines. And it doesn't matter, first of all, on a longer term chart. And second of all, it doesn't matter when you have so many damn trend lines, there's never a good entry. So I want the actual reversal points. So where I'm drawing trend lines is where I actually get a change of direction. Sure, other ones matter, yeah, but I want those actual changes of direction. So instantly right there and instantly right here, those are the two places I'm looking for trend lines. Okay, so those two obviously, and right here was a heavy change in direction, but I'm going to put this on the daily because I don't want those 4-hour wicks on here. So obviously right here as well. Okay, and this is actually nice because it's kind of a double trend line. And remember, more touch points, the better. So I actually kind of love this trend line up right in here. But we'll do this wick low because this is a pivot point, a pretty important pivot point. And the reason we could tell this is a pretty important level of confluence is how this liquidity cleared out. How we dipped down on this liquidity here. We came back tested, dipped down, and then that resistance or that support here became resistance right there. That's pretty important stuff overall. To really get used to in drawing trend lines is where these support flips happen, where we clear out liquidity, so on and so forth. So anyway, back to it. Like this area here, sure, there's some points I could like draw some trends on, but like I'm not too excited in anything in here. Really not too excited about anything in there. Yes, I need to add more trend lines to this chart, of course, but nothing's like striking my fancy like, oh, this is where I want to draw a trend line. Of course, I'll add some more, like this pivot point down here does matter, at this wick low, which we've got right here, that matters. Obviously these reversal points, and then this one right here, which actually, if you extend this line, that's just this one right here, pretty easy, because this is a reversal in direction. And then we've got our gap, which did fill, but we've got our gap here. But what we like about this gap is, look in here. All right, so we've got a liquidity. We've got a nice low volume liquidity draw pretty much in this area right here, which is pretty much that square. I don't need to, we already cleared that gap, everything else. But what we see in this chart here is we're going to likely have some resistance coming in at this wall here. And then again at this wall here. Those 2 points are going to be tough. But also we need to remember that building into that point is going to be tough. It's not just this peak liquidity here. It's this entire area up. So that 153 area is one where we're going to hit a little bit of resistance. But before that, where else do we have some peaking We have 137. Does this line up with anything if we look? Not really. There's nothing that really strikes my eye. Plus there's multiple levels around that volume all the way up. So I'm not really as concerned about this, but I do like to kind of take note of it because it's a point coming up really quickly here. So for me, this little shelf we've got from like 130, 650 up through about 138 right in here. We know if we could pop through that, we come into that liquidity draw, that area where we should move through it really quickly through here. So that tells me, what does that tell me? It tells me if we could break and hold 140, we should get up through 153 pretty easily. Now we cheated a position on this. We did start a position on this. Pretty high risk. Kind of catching a falling knife here. I gotta be honest, I wouldn't have taken a position on this if it wasn't for this pivot right here. I probably would have waited, found a little more structure on this. But what I liked on this chart in general is a few things. I liked how we cleared out this liquidity on the daily. And then we popped back above it and we closed above it. We closed Friday above this wick low. So instantly my stop loss on this chart's going to be the loss of this wick low here. Or, really Friday's open. So if this is my stop loss level here, because we did cheat our entry a little bit, we are in this one already. But we're playing really tight stop loss on this. So right around here, I'm out. Because at this point, it has proven to me, we cleared that liquidity, we bounced above it, and if we close it below it again, it's no point in me even waiting till below that 125. I'm going to cut it there. And then second part, so where's our target levels on this? We already know from what we were drawing that we're really looking for the break through this area here, and then we get to bank our liquidity draw through here, where there's low volume, there's not a lot of walls, not a lot of shelves. That's what we want to see. And then we've got a second one here. I'm drawing this opposite. This one I've got as like a shelf, and the other one I've got as the gap. So we've got another shelf in here. So these are the areas where and how do we play these? What are we looking to play with these liquidity type zones like this that come into these walls? There's a couple ways to play it, all right? You take your entries at the break of the walls, okay? We don't want to take an entry here, right? We want to take our entry, even though it doesn't seem like a big deal, we want to take our entry on the other side of this. We want to take an entry at the break of 140, play it up through that 153. And then we don't want to take the entry at 153. We want to wait. We want to take that entry at the break of 160 and play it up through 175. So, when we're looking at entries for charts, we really do want to avoid taking the entries within these liquidity draws, within these, or not liquidity draws, excuse me, these volume shelves, because these volume shelves are going to be tough to get through. Now, what we like about these volume shelves, if we start to rip into it and we break through it very easily, we could feel real good about the next level up. Because if, say, we open up tomorrow, we start to push, and we start to kind of test that 137, 138 into 140 this week, and we kind of break right through it, say we pull something like this, where we kind of pop through it, hit our head, sitting, and we're bouncing, but we're not getting rejection. And finally we break through it, and we back test something like this. All right, if we get something like that, we could feel really good about that next section of 140 through 155. So we don't want entries below these shelves. We don't want an entry there below it. We don't want an entry here below it. And did the backwards there. We don't want our entry here below it, and we don't want to take our entry here below it. We want to take our entries above it, okay? So our entry spots are where we will take entries at the beginning of these arrows. Now we're already in, of course. So the second part of that is, if we do start to push and we start to meet a little bit of rejection, these become our trim points. So we're going to trim here. And we're going to take those trims in these areas, especially if we start to hit a little bit of resistance. This is where we'll start to take our trims at. So we're taking our trims at this line right here. We're taking our trims right there, and we're taking our trims right there. And that's how, in the grand scheme of playing swings, that's how you absorb chop. That's how you're able to let those final contracts run. Remember, I was talking about, and a lot of you that listen to me all the time know I've talked about it a lot. That's how 90% of my profitability in 2024 into 2025 was on my final 10% of contracts. That's how I do that. And or if I'm taking the long term and the short term. So like a swing like this, I alerted and we'll take entry on a 320 and a starter on June or a January 2027, whatever it might be. And by the time we hit a couple of these trim points, we're good to go. We're already taking some profits, and we're free rolling the part of it where it's that free reign. So that's what I'm looking at on Palantir specifically. That's where my stop loss level would be. And on the other side of this trade, yes, we are in a position here. So what if you're not in and you're just looking kind of for some positioning? Let's make sure we hold this point here into tomorrow. If we chop and we kind of hold this point right here, that's where. That's where I would feel good about an entry if we can hold this point right here, pretty much 130 into a good part of tomorrow, because we do have enough juice in the squeeze to play at 130 up through that 137. And then obviously as we break through each level, we've got a secondary trade. Obviously stop losses in here. So what about the downside on Palantir? I'm not necessarily looking for too much downside on Palantir overall. It's tough to do fibs on this type of chart because are we going all the way down with our fibs? Are we going down to this main point here? What's the primary purpose of our trade? Are we looking to do leaps we're holding for 18 months? No, yes. Or are we looking for something else? So it's kind of a chart where it is a little bit tough to really identify. All right, I just want to make sure because I was showing someone the difference between the two. I want to make sure that my stuff is right. Okay. So as you can see here, when we draw it from these high to lows, we're also hitting the golden pocket. And of course, we do need to break above it, but we're in that pocket I like to see. And then that 137.70 is our confirmation break above. There's many places you could draw this fibs from, including all the way at the stone cold bottoms. There's many places you could draw fibs from on this, but for me personally, because it's a mid trade of not too long, I'm not going too far out on expiration. I'm really kind of just looking for this build here. So that's what I'm looking at in Palantir. Tomorrow, if we can hold 130 this week and taking that entry through our 138, and then at the 140 taking it through 155, and then the 160 through 175. So we have three different zones here. We've got our 130 to 145, and then we've got our right here, we've got our 160 to 175. These are great zones to play overall. So that's what I'm looking at on this one. And Palantir was, and what I liked about Palantir Friday and why did I decide this was an important a trade that I was willing to kind of jump in a little quicker on, even though we haven't really formed our baseline yet, is because Palantir went from one of the biggest sellers to one of the most green tickers Friday. It was one of the strongest tickers. So it was definitely, yes, I'm recording. Yes, I'm recording, Katie. Um, oh my gosh, you guys don't need to tag me over and over again. I'm recording the stream. Thank you. Jeez. So that's what we're looking at on Palantir specifically. Another one that I immediately wanted to go over was Hood, because Hood went from looking like absolute horrific to looking pretty decent Friday. Nice bounce Friday. And the secondary part of Hood that was interesting to me was crypto was starting to try to form a little bit of a baseline. Now with Hood specifically, I want to reiterate a couple things. First of all, see now it sharp switched to regular on Hood. So weird. Ever since I've been trading props on my account, it's been pretty strange. It likes to flip. You always got to double check it. So on Hood, we've had the heavier sell-off on Hood. And if crypto does start to catch a bid and start to heat up, Hood is immediately the chart I'm kind of deviating to. And same thing on Hood. What's our primary purpose of the chart? Are we looking for holding something into the middle of 2027? We want to go to all the way to our lows at that point, which we're at the 0.25 from that level there. I wouldn't necessarily, I think it doesn't make sense choosing this as our fibs point right here, because that's like, doesn't make sense. If you're going long term, you're going to go here. And if you're going a little bit more mid or short term, you're going to go here. The one in between the two really doesn't make sense, in my opinion, as where to draw your fibs. So for me, the fibs part, if I want to specifically draw fibs, oh, that's why. Got my drawing tool on. In a medium, because I'm definitely not ready to invest heavily into Hood yet, period. Nope. Don't trust crypto. We got to wait and see. Hood's another one. Sneak in a small entry this close to the 0.5. For me, it's almost like it's good enough. It's close enough. We're at that area where I'm satisfied with as close as we are to 0.5. And it's also this point here. Does that mean we can't come down and really kind of sweep that 67 level? No, it doesn't mean that. But it does mean we have a very, very clear stop loss level here. If we're looking for those bounce at the bounce at the 0.5, we definitely have a very, very clear level of confluence that we're dialed in on as far as, okay, we need to abandon ship here. Longer term, we already drew it longer term. We're right at the 0.25 from lows, like all-time lows. And as far as our levels we're looking at here, it's kind of very similar to Palantir. Hood did sell a little heavier and did bounce a little better and then had that little bit of resistance and bounced some more. Same thing. We had this low. And we cleared out that liquidity, created a lower low, and then closed above it on the weekly too. If we put this on the weekly, we cleared liquidity and closed above it. We're by no means bullish yet. We are in. Yes, Bagman Joe, was it you and DMs? Yup. Yes, I'm so glad you said something, because I was like, do you see how I was on a logarithmic on my Palantir and I switched to my Hood chart and it was on regular? Always check that, especially if you guys are doing any sort of prop trading on your trading view. Make sure you've got the scale right, this scale, because what that means, regular versus logarithmic. Let me just do a little example real quick. Regular versus logarithmic. Logarithmic is percent pace, regular is not. So if we have a chart like this right here, okay, I want my percents to look like equal moves. I don't want it to be where if we have a strong move, all right, if we have some sort of a move from $1 to $100, all right, so on a logarithmic scale, if this is $25, this is $50, this is $100, okay? the percents, 25%, 50%, 75%. That would have been a better way to do it. We want each of these equal, all right? I don't want it where $1 to $25 is super bunched together at the bottom because it's less dollars. I hope that makes sense to you guys. I can do I don't want to get off the topic right now. I 100% prefer logarithmic trading. I always will. That's how I want to look at my chart. I want these equal spaces with percents. So, but anyway, we cleared out that liquidity. We came back. I don't want to get off topic because I'll be on here for 6 fucking hours, guys. All right, so what we're looking at here is we have an inside bar. All right, another thing that we really do like with this one, inside bar on that impulsive Thursday, we closed above the midpoint. All right, you guys know about me and midpoints on impulsive candles. So that's kind of like our tighter point of control. That's our tighter stop loss level as well. And especially this lower day as well, pretty much at the midpoint of that big sell-off bar. So that's kind of like our staying a bull level, in my opinion. And then now what we want to see tomorrow, if we have that continuation or the chop, I want to hold this midpoint of the bar, and then my stop loss last shebang is last level of cutting the trade is going to be here at the low of the previous week. Because I'm playing these pretty tight because I took a pretty risque entry without building out a foundation first. And now we have this gap as well. All right. And let's midpoint our gap. You guys know. All right. And that gives us some built-in small targets because we do have a lot of liquidity. We don't have great pivot points anywhere on this. So we know we've got our midpoint gap and then the full gap as some target levels on the uptrend, which is what I'm looking for. And then, of course, levels throughout our pivot points. Where do we have pivot points? Well, our most recent one was here. Oh, let me do that. So we're looking at that right there. I'll keep those blue. And then obviously our 0.25 and everything else on the way back up. Crypto has to stay hot in order to feel kind of Anyway, so those are the levels I'm looking at. Sorry, I get annoyed seeing the comments. And the gap fill obviously on the way up. So those are levels on the uptrend. We have a tight stop loss. We feel like we could take a little bite out, which we did. Now Hood, I don't know if I put it in my channel. I told everybody we talked about it on the live stream Friday. Did I put it in my channel, or did I say that was voice only because it was super high risk? Okay, it says watching, but I told you guys in voice. I know for sure in voice I said I was taking a little bite, but it was risky to take Palantir and Hood. Especially Hood because of its dependence on the crypto market. It's just dependent on crypto. But it is another one I'm watching, and the reason I'm watching it and very interested in Hood and Palantir was they were our bullish outliers Friday. They could get heavy bounces. So it's definitely two we're watching, how we want to play them. And the other thing we like about Hood is if you look right here, we did kind of bounce off of a heavy volume shelf right there. So that red line I had as kind of my stop loss line is also a volume shelf, the lower end of a volume shelf. And we closed basically at the top of it right here. That's good. We want that. I would really love to. Now, we can't freak out if we gap down overnight, this, that, the other. We can't panic sell. I would really love to open up above this shelf here. I would really love to hold that area right here, as you can see. which was that chop over here. I would love to hold that 76 or so area at yesterday's open, or yesterday's open, tomorrow's open, because once again, we have a nice little liquidity draw in here, no volume, and a lot of room to play up to this volume shelf here. So same thing. We've got the volume shelves more than kind of trend lines. When it's a chart like this, looks like a mountain pretty much. And not really too many levels to feel secure in. Oh, that's my profit taking spot. Let's identify our volume shelves instead. And then we have the 0.25 or a little below it at about $100, which is an important level regardless, because it is $100. But same thing, I like to identify these little pockets of low volume and high volume, and then play in between. And this is kind of a really good rule of thumb with day trading, or swing trading. Don't take your swing trades right at the bottom of volume shelves. And then the second part is, if we rip through higher volume shelves pretty quickly, we can feel good about our trades. So this is another one where, even if you're listening on X, by the way, on X, 14-day trial, double the amount of usual trials. Usually I only do a 7-day. I'm doing a 14-day for a couple days only. Link is attached to this video and is also pinned in my channel on X. We also have a 2-day workshop coming up where we're giving away a massive amount of free prop firm giveaways. No purchase necessary. I'm going to repost that link right now. It is pretty high. I posted over the weekend, but I want to make sure it's very recent. That link for the free workshop, I'm reposting right now. And it's the most recent thing posted. No purchase necessary. So come check that out too, guys. It's you can't go wrong. Let's be real. Free education, and I hang my hat on us having the best education out there. If you don't believe me, go look at our reviews on WAP. Look at the reviews of me on WAP, and you'll see. So that's what I'm looking at on Hood particularly. And then obviously the 0.5 loss, $68. That's where things could get really rough on the downside. These are riskier type setups. But a couple that I think look good. Now let's identify a couple charts to watch into tomorrow. Let's start with NVIDIA, which I've been saying, in order for this market to hold up through February into March, NVIDIA has to hold up, period. That's just, there's no ifs, ands, or buts about that. And NVIDIA has held up. It's been chop, but it's held up. We closed Friday pretty much exactly at, long-term point of control. I'm talking 6+ months point of control. Probably even longer. Okay, secondary point of control, I guess. But very long-term point of control here. Definitely the 2026 point of control / 6-month point of control. Second part on NVIDIA, which is substantial, and we did crush a 500% NVIDIA swing off this level, is bounced right off that 200. That is huge. And now we are back testing off that. This is a very clean zone on the upside and the downside. Which way do you want to trade it? Do you want to measure the upside because we never did break that upside point right there? Sure, put it that way. Or do you want to measure the upside? You can flip it either way. We're going to be at the 0.5 because it's a very even range. I'm measuring the upside. And we're right at the 0.5. So that's what we want to pay attention to. Into the market open this week. Like we said, we have a pretty massive volume shelf right at 180 to 182, which we could see it. Can we see this insane chop? Volume shelf equals insane chop. pretty much, and we have lower volume through. And there's a reason why every time we've been breaking 182.50 into 183, we played it down and we played it upside. If we get this major bounce and we can open tomorrow above that 182-ish, we could get a secondary bid here. Unfortunately, we do have another pretty decent volume shelf up at the 0.25. As far as shorter term, so we have already identified this is our volume shelf. I'm going to turn this off because I'm putting on a shorter term time frame. We know that's our heavy duty volume shelf. We know we have chop. It's just not an ideal chart, and I've talked about that a lot. A lot of my swings have been short term lately because a lot of charts that look like shit like this. It's just not ideal. Doesn't mean we can't trade though. So, it is what it is. And we put on like the 15-minute. It does look a little bit clearer, but really it's the same thing. That's a phantom wick there. Ignore that. So into tomorrow, where do we have major pivots? I mean, we kind of have one right here. And then I don't really want to go over day trade levels because we could gap up or down into tomorrow. That's just the reality of it. So I'm not really interested in doing that. We have futures open right now. It's not ideal. But, really what I'm looking at is that 183.50. If we can open and hold 183.50 and play that up through our 0.25 again, which is about 188. That could be a fun trade. We do have a pivot point here. So that's kind of what we're looking at there is that 183.50. Loss of 179.39, and we're in trouble. We have to prep for downside too. It's been a very tumultuous market. So we're really kind of looking at, why did I draw a box there? I should have drawn. So we had the price point. So we're looking at, as far as our NVIDIA range, 183.50 and 179.50 for our puts and calls. We're our bullish trigger, bearish trigger. And let me pop these charts in the chat too. Why does this? I hate when that happens. All right. So let me pop all these in the chat. NVIDIA hood real quick. Put that on the 4-hour. So you guys have something to cross-reference in case you can't watch the video again. And then Palantir. All right. And then plays on these up to the 0.25. I mean, excuse me, the 200, not the 0.25. The 200 is really kind of like what I'm interested in. All right, there we go. All right. Let's put up the cues. And if anyone has questions that's in Discord, ask. We don't have like amazing setups for this week, so it's really kind of a little bit like, ugh. All right. So, on the cues specifically, we got very close to the 200. Much closer than we did on ES. Or SPY. As you can see here. So, our 200 is at 580. And we came down to 587. So we're about a point away from pretty substantial level. I just want to check NQ real quick to see where we're at right now. If we have, yeah, we've been chopping. Okay. If there's anything giving me a really differing perspective because of being open, futures being open. All right. So, I mean, it's really same old. It's this chop range with a pivot here and our pivot here. I mean, let me put it on the daily. I don't want pre-market wicks. Yeah, see, that pre-market level was much different. So we've got here, and it's really the same as Palantir, same as everything else. However, Qs, as you can see, did not clear liquidity. All right, so that's pretty important to note. We did not clear the liquidity of this low here. So that 594.81, incredibly important area. And then I'm going to just put it out there like this. If we lose that area, the 200 will be tested. There's no will be. There's nothing left after that. There's this area here, but I don't even really, I mean, that's really it. These two levels. And actually, yeah, right there. That's it. So if we start to get heavy tomorrow into this week, that 594.81, and we get incredibly bearish through these two levels. And it's really quite easy to see exactly what it is. And now if I was a betting man or woman, this is it right here. I mean, if we have a daily, say a 4-hour candle close below that 594.80, you know, sure, we could catch some support at this little volume shelf here. You know, we got a little volume shelf there. It's also this triple wick here on the daily. So yeah, we've got that area, but really our focus, if we are bearish, is here. And it would be a massive magnet down through here. Massive. Because it's a major pivot. And it's the 200. So we've got this pivot point, true confluence, where we actually switch directions at this level. So that 580. So let's type that out so you guys know what I'm saying. Daily loss of 594. And that 580 has high probability. When it's the 200 and it's this major pivot like this, let me turn it all the same color so you guys can assimilate it all to each other. There we go. So of course on the upside, I mean, it's the same chop. It's the same shit. We don't have these great levels of confluence. Of course, we've got our 607. And then not even. I mean, these are just levels where you would profit take, but they're not super clean. Ooh, that's a sexy pivot point. None of that shit. So just really those two levels, and then we get our liquidity draw up into 620. So the only good part of this chart, the only sexy part of this chart is that break a 610 play up through 617. That's the only part I actually like on this chart. The rest is shit. It's all chop. And that's just the reality of it. Let me pop this chart in the chat. Do you guys have any questions about the cues before I move on? How we would look to play this? Netflix, I'll check it out. Yeah, days like this, no fucking way. I'm not trading futures days like this. It's horrible chop. It's like trading a pre-market. It's been trash. Here's our QQQ. Let me check. I've got a delivery coming here soon. I want to see. Okay, not yet. All right. Netflix I'll get to in a minute. I don't know if it's really necessary to do SPY if we did cues. They're very similar. Anyone else have some charts that they're curious on? What am I curious on? Let's see here. Meta, I still am curious. Definitely curious about. All right, we're going to start clean on this one because it's got the volatility we want for trading. So as you can see on the 4-hour, got this pretty massive kind of flag dealio going on here. Kinda. Looks a lot clearer on the 4-hour, but even then, it's not great. All right, let's check out. Let's pop a fibs on this last breakout. Okay. So this shows, unless we reclaim that 618 in the morning, this shows a little more downside possible. Not that this is the end all be all fibs, because we've swept through this area so many times. You can't trust the fibs as much. God, look at how perfect that gap fill was, guys. I just want to show you something about the power of gap fills. Look at this. And we played this. We made money on Meta. But let's just look at this. So when we had that sell-off on the gap here, and those midpoints of gaps too, we had the sell-off here. The first time we caught a bid, I want to make sure that's not a phantom wick. I don't think it is. No, it's not. That was that news catalyst. I remember it now. That is not a phantom wick. So the first time, look where we had that, we hit our resistance right at the midpoint of wick. And remember, those midpoints matter. And then second time we had a bullish push, filled the gap instantly and came down from there. I mean, it just shows how substantial those gaps really are. And then obviously it has turned into a pretty substantial level of resistance in here. And then it was resistance again right here. So, I mean, really, this Netflix doesn't, or I mean, this Meta doesn't have too much of anything making me overly excited to want to trade it here. Yeah, I'm still waiting on this. I honestly want to see us back above point of control and make sure that this doesn't turn into a massive head and shoulders. This is all high volume in here. I really need to see us back at 680 before I'm interested. Or down towards this trend line. Anything else on Meta, I'm not too interested in right now. Let's check out Netflix. Netflix, I'm trying to be patient because they're definitely going to be buy opportunity. Make sure my... See? Now it's so crazy. These charts. All right. What's that up there? Oh, who knows? So obviously on this one, long term, because this is one I'm watching for long term. We've got a couple areas. We've got our 68. We've got our 0.25. Does that mean that's the only end-all be-all only fibs that I can trust? No, not necessarily. But I mean, this has been pretty substantial uptrend if we put on the weekly. You know, there's never been a pullback where I would say, you know. So, I mean, honestly, everything on this chart says we're not done bleeding. And I don't have an entry trigger yet. I need us back above 70. Sorry, 80. Is that 80? Yeah, 80. I need us back above 80. Or a support catch at this major confluence here. So I need us down here testing that level. Or I want us back above 80. In fact, I probably want us back above 81. Oops. Lock this chart. There we go. So, yeah, I mean, really back above 81 right here. That's kind of like my trigger point to buy longer term. And maybe cheated at 80. So if we take a cheater entry at 80, like a first buy right here at the break of this level here, and then like a stop loss down at the loss of 80 again. Like taking that cheater entry right at 80 at the 0.25 and then being ready really to trim it at 82 on a short term play up. And then when we break this double bounce level here, then taking a little bit of a more positioning. That is kind of definitely what I'm looking at there. I can't touch it here. I'm waiting. I've been drooling waiting for this fucking trade. 200's curling down. Yeesh. I'm not loving it. We have to reclaim 80 this week. We did have heavy selling, and we're trying, like on the weekly, we're holding the 0.25 technically. We haven't had it, because this, remember guys, one thing about fibs, we're going back to 2022 on this chart. All right? So what that means is this candle still strike right through on the weekly. So we didn't lose it on the weekly. We need a candle open and close below that 0.25 to feel like we're in trouble. You got to let wicks of candles play out, you know, when you're playing with 4 hours when you're playing with 4 years of data. So I'm waiting for 80. So my plan on Netflix, my plan is daily open above 80, and at that point, looking at 8 weeks out, and then when we get the weekly, That's my plan right there. Because you can't take any. This is dead man zone. I cannot take a trade in here. This is like turn it bright red. Do not touch. Like, you cannot take anything in here. This is, do not touch this. Because it could go either way. All right. So we've gone over Netflix, Q's Hood, NVIDIA Palantir. Walmart, I'm still just riding the wave of this insane, miraculous, beautiful swing trade we took way back here. Subtle flex right off the 200. We took that. Nike up 3.5%. Let's look at Nike. So we still have that higher highs check. Obviously, this is our major resistance point. $200 starting to curl for the first time. Man, for a while. I like that. The 200 starting to curl up, actually curl. It's just such damn chop in this area. Like, what Nike in this area tells me is that there's two ways to play Nike. All right. First, take and what I mean with time is like 6 to 12 months plus. Or you wait for levels. And on this chart, that level would be, I mean, honestly, 70, 60, 69. That's what we're doing on Nike. I might make a starter on Nike. I gotta be honest. I might take a starter on Nike. I think this consolidation is finally setting up. This is the weekly too. So if we put on the daily, yeah, I mean, 64.50. Possible inverted head and shoulders here. Yeah, I think Nike might get a little action from Emma motherfucking Jamma today. Well, tomorrow. Just a little starter off this volume shelf. So 8 weeks, $60 stop. New quarterly dividend too. Yeah, we're gonna play ball with Nike. every chat in the chart. AI's down to $10. Wow. So the difference between Amazon and Palantir and Hood, Amazon has not cleared that liquidity. That liquidity was resistance on Amazon. Amazon has not proven support pickup yet. So obviously we've got the right here. We've got that pivot. And then right there, which there's already a line. And then obviously we got to draw our box. Two gaps. Oh, schnuck it. All right. Well, for me, I need Amazon obviously back above 200. I need the daily close above 200. And then things could get interesting. It's hard for me to use any sort of fibs on this because this chop makes me not want to even think about drawing a fibs on this. But if I were to draw fibs over this break level, which I don't love it, we are in the golden pocket. I don't love it, but I will draw it. All right. So yeah, we need back above 200. I like Amazon above 200. Amazon could start to play ball into the gap. And that's really what we're waiting for. And the bottom of the gap fill is also this double pivot here. So that gap is pretty substantial because it's also where our double support is. Will support that might turn into resistance. So yeah, break of 200. Into the gap, bottom of the gap, so into 210. Oh, didn't mean to do that. So we got the 200 to 210, and I'm not cheating this entry. I will not cheat that entry. And then the secondary gap up to point of control. And then above that, it's just shitty. But that's kind of what I'm looking at here. Need 200. I won't play ball till then. All right. You guys have any random questions? No more charts. Any random questions to ask? Anything that you've been wanting to ask about anything random? No, very quiet, very quiet. Going once. Going twice. All right, guys. Peace out. I'll see you in the morning on my stream. Thanks for hanging out. Going over some charts with me. A little bit of education mixed with those charts. And that's all I got. Bye, guys.